Thank you, everyone. Thank you to my panelists for coming today. So I'd like, as this conference draws towards its close, I'd like this panel to sort of really grapple with some big ideas in terms of the big investment opportunities, not just, I think, for 2018, because we're already halfway through 2018, but into next year and into, in fact, the next decade. You know, where do we see the biggest opportunities for fintech startups? But before we get into that, Ashley, I'd like to talk to you a little bit about the big sort of tech story of the day, I guess. We saw, we've already heard a lot about it in some of the other panels today. Adyen, a Dutch payments processing firm, IPO today. Its shares doubled in the first day of trading alone. I think it now trades, at its current valuation, it trades at 100 times EBITDA. Does this market look frothy to you? Are we in a bubble here?
So it's always hard to predict a bubble, but one thing I can say is within Silicon Valley, we are definitely seeing a large fear of missing out. So at Social Capital, we see a number of pitches. Fintech startups, we invest mostly at Series A, claiming that they'll be the next millennial bank. And it usually starts by gathering users. Maybe there isn't a proven business model. So we haven't made any significant investments in that space yet, but we've definitely seen competition sort of funding those, large user number but unproven business models, because if they do figure out the business model, it will be a tremendous outcome. So.
But would you say this? I mean, this is still a very good market, would you say, for companies that are trying to raise money?
Yeah, I would say so. Definitely.
And we were talking earlier about millennial banks. Are those the pitches that you see most of these days? Is that sort of the hottest pitch that crosses your desk at the moment?
Yeah, we do see a lot of millennial banks. One area sort of within that that we're interested in is sort of subsectors within that. I personally think that it's going to be more unbundled, and so there isn't necessarily going to be a millennial bank, but there'll be millennial credit solution and probably multiple, and a millennial insurance solution, which hopefully is the one that we funded. And so we do see a lot of these sort of subsectors. Real estate tech is another one that's sort of tangentially related to fintech as well.
We're going to talk a little bit about China in a minute, which is obviously the hottest sector right now when it comes to fintech. But before we do, Manuel, we were talking last night about some of the untapped markets out there. About everyone talks about Singapore and Shanghai and Beijing and London, Silicon Valley, etc. But you've been focusing more on the lesser known and perhaps even greater potential fintech markets. You want to talk a little bit more about that?
Yeah, no, absolutely. I mean, traditionally, I run the strategic venture arm for Santander. And traditionally, as most global VCs, we've been focusing on the main hubs, so Silicon Valley and London, maybe somewhere in Europe and Tel Aviv. I mean, we feel that fintech talent has been democratized, and right now we see very good companies emerging from places like Mexico or Brazil, where we did our last investment, or even within Europe. It's not the traditional, I would say, points of concentration of capital, talent, and clients that prevail anymore, but it's a little bit more diffuse. So for VCs, I think it makes life a little bit harder, but at the same time, I think it's actually quite interesting in terms of how innovation is spreading across all those kind of tier 2, tier 3 classic ecosystem, and that also tells you probably a little bit also about maybe the excess of competition and the saturation of some of the more traditional ecosystems.
Edith, there's I don't know if some of you have seen this as you walk around the conference center, but there's a board somewhere where you can vote on which fintech hub is going to be the one to watch in 2019. New York doesn't do very well. Silicon Valley doesn't do very well. London does pretty well, but the big one that everyone voted for was Singapore. Do you agree with that?
No, not at all. No way. No. I guess like the whole audience just don't go to China enough, and I'm not an ambassador of China, but if you think about for the last 10 years, I think like the #1 fintech innovation got to be Alipay and WeChat Pay. I'm really into statistics, so I was showing you earlier the fact that WeChat right now, in terms of MAU, monthly active users, is over 1 billion. And for Alipay, is over 500 million users. And I think the reason, not because I'm Chinese and I'm pro-China, is really, if you think about for FinTech, if there's really existing banking system being around for so long, it's just really hard to replace existing system. You have to deal with banks, regulations, and China was really backwards, right? Before Alipay, WeChat Pay, most people have no credit card. And really start with nothing. When there's nothing, you need to create something from scratch. So that's why it's mobile first. And they were able to, since early last year, any public transportation or most of the restaurants, if I take out actual cash, the cashier will look at me thinking, where have I been? And in fact, the funny thing was, this girl, I remember I was trying to pay for something and I didn't have enough credit on my WeChat Pay. And she literally, I have not dealt with cash since I started here. That's how cashless it is. So I encourage everyone to come and experience it because it's a completely different way of operating, particularly for a mobile payment.
And can you tell us a little bit about where, when Chinese firms look at the West, where do you see most of the money going? What sort of opportunities are Chinese VC companies most interested in? Because it's sort of surprising in some ways. You're right, you go to Beijing, you go to Shanghai, and it's just when you see how the cashless society works, it's incredibly convenient, which makes it even more surprising in a way that we in the West, and especially in the US, have not yet been disrupted by any of these big China FinTech companies.
Yeah, so to start, social capital is not in China yet, but Sequoia and IDG been around, tier 1 VC firm been in China for a long time. But having said that, I think the strongest VC in China is actually Alibaba and Tencent. Alibaba particularly, if you think about it, they started with an e-commerce company. It's a combination of eBay and Amazon combined. And about 3 years ago, the Chinese government asked about 6, 7 entities, including Alibaba and Tencent, to actually give them banking license and ask them to develop the concept of credit score. If you can imagine, we actually invested in Credit Karma, but the concept of credit score is quite new to China. So they are using their e-commerce transaction data to slowly build out the credit and risk profile of normal consumer. And in fact, I actually think that I spent half of my time in the US. The current credit score system, I think is quite backward. They're not really capturing all this Square, PayPal activities at all, and they really should. So in terms of investment, sort of outside of China or in China, you see like Lending Club of China, social trading, almost everything that you can imagine. All the Chinese VCs and Alibaba is actively investing. But having said that, overseas, you see that they invested in, Alibaba invested in Paytm, and then recently also bought Lazada, which is the Amazon of Southeast Asia. So they're acquiring, investing, anything that related to mobile payment or e-commerce with a full intention of gather as much data as possible to help. I think the consumer behavior China and Southeast Asia is closer. So a lot of activities definitely around there.
And Ashley, how do you, when you look at Asia, I mean, do you see a market there that's almost impossible to enter, given the sheer size of and the power of Alibaba and Tencent? Is that sort of off limits, almost?
Yeah. So I do think China is somewhat unique, and we haven't been looking there at all. We have made several FinTech investments in India, and part of that has to do with just the relationships that our firm and partners have, but sort of similarly related to consumer spending data, developing consumer credit scores, and things like that.
Yeah, actually, to us, again, being corporate VC, China is not of much relevance to us at this point. But it's a market that we're trying to understand a little bit more. Because there's a lot of innovation and there's a lot of kind of behavioral driven innovation that is probably relevant across the globe. I think the other point is because more and more we run into outbound Chinese money in Europe or in the US, whether it's through direct investments or through LP investments. And there's a lot of Israeli VCs which we co-invest with who have Chinese money behind, et cetera, et cetera. And not only Chinese, but Asian money generally. Rakuten has been very active in FinTech. So somehow it's interesting to understand why those investors are getting into our natural markets, so to say, and see what that means from a competitive and from an opportunities perspective, because we want to see those things as opportunities to actually do interesting things together and bridge the best of both worlds in our core markets.
Actually, I'd like to talk a little bit about how the model of financing is changing. You were saying earlier that we're starting to see pitches from B2B FinTech platforms that could actually be disruptive to venture capital firms. How deep is this alternative pool of funding?
Yeah, so I'll spare the audience anything on ICOs and whatnot. So, but beyond that, it is interesting. So I personally focus on B2B business models. I have a number of partners that are more consumer focused. And so we have seen pitches where businesses are offering various debt products to other small businesses. And it is an interesting experience to be sitting there getting pitched and then thinking, this portfolio company, especially if there's like working capital needs or accounts receivables or something like that, thinking that actually might be better for the company than venture financing. So we have backed one company in this space, not yet announced, but we're pretty excited about it. And we probably will use it. We probably will refer other companies within our portfolio to some of these platforms. But yeah, there's a lot of, there is, VC disruption on the horizon that we see. At Social Capital, we've definitely taken some bets that our peers view as crazy to disrupt ourselves before we are disrupted. But yeah, I think there's a lot more options for financing small businesses and tech startups nowadays.
Do you want to get in on that?
Yeah, no, I think in line with what you were just saying, I think as the market evolves in terms of finding or being interested by slightly more sophisticated ways of financing companies, I think in our case, the corporate venture model is also taking quite a bit of hype these days. And if you look at the numbers, definitely in FinTech, but I feel across a number of other verticals, corporates investing, I would say, the right way, so with the right incentives and the right kind of investor alignment, is taking up. And I think the reason for that is, so to your point, because that investment also comes with some other attributes, such as expertise or such as maybe a commercial contract that are actually things that de-risk the company and that are accretive to their roadmap. So I would definitely agree that as part of that kind of enhanced ways of financing, corporate VC is definitely getting more and more attention as well.
I do have to add for some of the audience, I'm really into blockchain and crypto, and particularly for early stage. I think overall last year in the States, don't quote me on it, probably $5 to $6 billion is raised on early stage like equity investments, but for ICO and token investment, total dollar is over $14 billion. Just Telegram alone is over $1 billion. So there's definitely hype, big bubble. But I do think that it's here to stay.
And can you tell us a little bit, clearly the last week has been since the weekend, we've seen a further slide in the price of Bitcoin. I think it's down 50% from the peak. There's a lot of concerns, of course, about what the Chinese government is going to do in terms of clamping down on the currency. Can you tell us a little bit about the mood in Beijing and Shanghai around that now?
So obviously, I keep track of all this. September 4th was the day that they shut down all the ICO, and 1 week later, they shut down all the exchange. But, like Asians love to trade. Just because you shut down doesn't mean that you've really shut down. Everybody just move, right? So all the exchanges, including Binance, OKEX, and Huobi, all moved to Japan, just offices. And then after that, Malta, after that, I don't know, they're all nomad around the world. But ICO and crypto exchanges, they are banned in China. But there are so many active crypto traders, and there are still many actually crypto projects. That's why I spend a lot of time these days in Hong Kong and San Francisco, because I felt like I'm seeing more Chinese people in San Francisco, because now they all have to leave and continue to work on their crypto blockchain projects.
And in terms of, I mean, just staying on Asia, I mean, obviously, you know, as we were talking about earlier, Tencent and Alibaba are extremely dominant in their domestic market. But do you see, in terms of the big Western tech firms, fintech firms like, you know, and Google and Amazon are moving into the space as well, do you see Southeast Asia and India as a much more attractive potential market for the Western firms coming into Asia?
So I think in Southeast Asia, you know, Facebook, WhatsApp are definitely dominant in terms of communication. But having said that, you know, in terms of e-commerce, it's harder. Doesn't matter Chinese or Americans. It's just harder. Anything to do with logistics, because India and Southeast Asia, both logistic and even some of the highway are not built yet. So it's really, really tough when you are trying to do e-commerce and be able to do delivery. That's why you see that now, you know, even Uber sold their Southeast Asia business to Grab, and instead of, you know, the Chinese trying to build, they invest locally. But I do think that Southeast Asia is a big battleground between the big internet giant of the East and West.
Who's your money on?
Alibaba.
Because?
So Alibaba already have done acquisition of Lazada in Southeast Asia. And Jack Ma is basically our ambassador and advising many countries. And on top of that, just the behavior is very, very grassroots in the developing, in that part of the world. You can't really remote control and trying to helicopter style and come in for 1 week and trying to build a business there. You really have to stay there. And in Lazada case, what I heard is rumor that literally an army of people from Hangzhou just move and trying to help out the business for Lazada after the acquisition. It's not easy to build a big business in Asia because languages, logistics, and communication is just very different from the West.
Manuel, you work for Santander, so I know you probably need to be careful about this question. But more broadly, when you look at sort of the big Wall Street, the big banks in the West, do you think from talking to your colleagues and rivals and competitors that the big banks understand enough the threat that they're facing from fintech disruption?
Yeah, I think so. I mean, I think the bank's kind of self-awareness of what's really happening out there has changed dramatically in the past 4 or 5 years, I want to say. Now, every single bank, I think, is thinking about how to partner. Every single bank is thinking about, I don't know, if acquisitions, internal build-ups. So at the end of the day, if you look 6 years ago, very few banks were thinking about these things, and now banks are trying to become more platforms and try to really engage with the ecosystem. I think there's maybe still quite a bit of work to do in terms of how to execute on that, but at least the awareness is there, which is a big change in a very traditional industry, as you know.
So we don't have much time left, but so I think I'd like to close it off by sort of asking each of you in turn where you see the biggest opportunity or opportunities for investment, in not only for the rest of 2018, but over the next 4 to 5 years. I know that's sort of a slightly unfair question to throw at you right at the end, but who'd like to get us going on that?
Yeah, I'll pick up on your point about the Singapore kind of hype out there. I think Singapore has done a lot of effort in creating a regulation that promotes certain fintech businesses. And I think I personally see a big opportunity for the next 2 or 3 years in regulatory-driven businesses. So if you look at what's happening in Singapore, if you look at what's happening in Europe with PSD2, if you look at what's happening in Brazil and Mexico with the new fintech laws, I think, interestingly, governments and the way they're thinking about data and the security of their citizens, et cetera, are opening up a lot of new opportunities. And to me, that's probably one of the key highlights.
They're more liberal?
What's that?
You said they're more liberal when you mention those countries like Brazil,
No, I think
Israel. How would you differentiate
They're just regulating and they're just creating kind of the right base for development of new fintech companies, right? And it may be a little bit different. I think in Latam, both Brazil and Mexico are just trying to regulate an industry, whereas really in Europe with PSD2 or GDPR, or in Singapore, they're really trying to create more the basis for a new industry to grow. And fintech companies are definitely playing a big role in that. And so if I were to bet on a particular trend, it's probably a lot of the things that come from that change in regulation and kind of new way of looking at data and clients.
Yeah, I agree completely with the data piece. That isn't necessarily a new trend, but I think it is becoming even more important. It's one of the most defensible aspects of a business. So really being a platform that can build out a data graph of users or businesses or whatever it may be. And we definitely ask ourselves with every investment, what types of interesting or asymmetric information does this company have access to, and what could that unlock in the future? And then related to the regulation point, I would say increased globalization. So we are definitely seeing more and more of that. I think part of it is US companies that have historically been pretty satisfied with the US market are starting to increasingly look outside. There's also a lot of tools to make it easier to internationalize and localize your business. And then also, as VC ecosystems around the rest of the world, including in some more emergent and frontier markets, deploy more capital into startups, a lot of those startups need to be global from day one because the given country they're in is not quite large enough. So we're definitely seeing a trend toward globalization, and that's where traditional data models are not always going to work.
Is there a particular frontier market that or sector that you find particularly interesting and exciting? Intriguing?
Yeah, so I mean, at Social Capital, we have recently launched a fintech platform of our own called Capital as a Service, and it is a global platform for entrepreneurs anywhere to come and apply for capital, and we make data-based decisions. So it has been called a robo-VC, which I don't love, but it is descriptive. And through that, we've seen a lot of activity in Latin America, specifically Mexico, Colombia, a little bit of Peru, as well as Southeast Asia. So, and we have made some investments in Indonesia specifically.
Edith, I'll give you the final word. Where do you see the most exciting investment opportunity?
Anything with buzzword AR plus AI plus blockchain, awesome.
Buy.
Buy. I didn't come up with it, but I really enjoyed what Ashley was saying about like focus on millennial. But if we think about, I think young people have a certain behavior, and when you're below 25, you have certain behavior. And then after you have kids and you start to buy stuff, right? And you have different sort of behavior. And I actually learned that from listening to some of the speech from Jack Ma, thinking about every single emerging country, when your population is really young, the fintech product or financial product, shopping behavior is very, very different when your population grow older. So I think I don't want to keep going back to China, but there's a lot of really interesting things that we can learn from for all emerging market, depending on the size of the country and how young and old of that populations, and therefore the behavior of mobile. And AI will come when there is data. And I think certain countries like US, mostly Europe and China now have enough data. I'm really excited about AI, but if there's no data, there's no AI, right? So in that sort of country, there's really interesting AI investments that we're paying attention to. But for Southeast Asia, it's not there yet. So therefore, we're looking at more consumer focus. Things that we could see that work in the US or Europe or China before, we can see that repeat again in these countries. And that's what we're excited about. And it's okay to invest in like a Me Too product in those countries.
Yeah.
So I think unfortunately we need to wrap it up there. We're out of time. But that was a fascinating conversation. And please put your hands together for our panelists. Thank you.